Good morning, everybody. It's Christian from Serene Education with the 4 Majors News update for the 18th of March 2013. Hope you had a fantastic weekend with family and friends, and hope everything went well with your trading last week. But start of a new week, let's have a look and see what the markets are presenting with us this morning. First up is the euro against US dollar out of my 4 pairs, and first up is the negativity that we heard on over the weekend regarding Cyprus. Looks like they're looking out for a potential bailout, and it looks like any of the people that are actually using any of the banking systems in Cyprus are going to take a huge major whack in order to get this funding approved. There's talk of around about 10 billion euros in aid that they've requested. But it looks like any of the savers on the island are going to take the brunt of it, unfortunately. And so the papers here in the UK have seen a lot of disgruntled Brits who are living out there, who are going to be losing small fortunes. So very, very sad to hear. But here again, it just shows the actual negativity that still lies within Euro or the Eurozone. And sure enough, Cyprus is no different. And a small island, so it depends a hell of a lot on tourism and also the property market. And I think it's well to be said that they're obviously going to be feeling the brunt of it now. That's for sure. So what does it mean for the charts? Well, if we look at the weekly and have a look, engage, and see what's happened over the past couple of months, you can quite clearly see through February we've seen the rot setting in. Beautiful move to the upside since July of last year. Major move to the upside, a beautiful swing high, really moving into the institution moving average through December, but in January, but coming unstuck at the institution moving average on our weekly chart. Now, I've been mentioning for a while now that I think, or what could be potentially happening now near term is, are we seeing, and I'm just putting it out there, are we seeing the start of a all-time high for euro against US dollar near term? And the reason why I ask that is because if I zoom out now, and there we go, all the way to 2008 when the markets really came unstuck, you can see that we had an all-time high at roughly 160, I think it was, if I'm not mistaken. And since then, we saw the 2009, end of 2008, 2009 bottom, and then we saw price moving high again into 2010. However, in 2010, everything came all the way back again, past the 2009 lows. However, through the latter part of 2010, we saw that move again, and this subsequently made these swings. Okay, and the bigger picture you can quite clearly see is each time prices actually pulled back or bounced, it's not actually carried through and broken the prior high. You can see the prior high here in September, October, November of 29. You can see that major consolidation we saw through most of 2011 didn't really go any higher, and in such actually broke again. Quite clearly see, you can see there, and you could notice that swing high here, or that high point, is lower than that prior major high. Now, are we seeing exactly the same near term? You can see our December, January high here on the hard right edge. Look at this move to the downside here. Are we seeing what is effectively the new swing? Can you see it now? If I just make it nice and big, nice and black, how's that? Or red. Swing low, swing low. Are we seeing a swing low now at the same point? Is 13,500 now our new major high, our resistance high? Okay, we've always had a resistance high on this particular pair, and each time it's moved back, well, recently through 2010 and the better part of July, August of 2012, we've seen price moving towards that 1200 mark. Below 1200 is an abyss. We know there's a bit more to the downside. However, a break of 1200 psychologically, that is like there's 1,000 pips and more to the downside after that. So are we seeing now near term the new high, a resistance high, okay, long-term resistance high? And if we are, is it not possible we could be looking at potentially the new look to the downside, would being our long-term target being 1200? So any shorting opportunities you're seeing now near term would be ideally back to these levels here. There's a slight consolidation here roughly around the 12,700. We've known that that's been a major support and resistance level since day one. Back to 2008, you can quite clearly see there's a consolidation area here at 12,700. So that will be our next port of call. on this move to the downside, on the negativity, and because of that 1300 being broken, that's also another psychological round number. You can quite clearly see going through 2009, 2010, 11, 2012, a lot of consolidation at that 1300, nice round number, and we've seen a break of it. And if I just zoom back in again, you can quite clearly see that last week after that indecision, you can see there was still negativity at the low end of that candle. We wanted to see a bullish engulfing candle here to indicate that we should be looking for bounce for this week, near-term bounce, put it that way. However, we saw a consolidation, a little red arrow popped up, a very indecisive spinning top, or doji, at 1300. However, last week we saw that bounce. Okay, so we had the bounce to start with. A lot of people taking profit after the sell-off here, taking slight profit, not breaking above that consolidation here at 13,500, which is the near-term one, and the 20-period moving average. And subsequently, by the end of play on Friday, we saw price taking all the way back again and closing lower than at 1300. So now on my daily, there we go. You can see 1300 there, and last night's move taking price lower. News coming out through the weekend, Cyprus in turmoil, I don't have to paint the picture, you can quite clearly see. And the Asian market's taken that and opened low. And jumped to the downside, you can quite clearly see on the daily. But going into the institution moving average now on our daily, so we should see a slight consolidation. So what we want to see is a breakout. We want to see a pullback. Are we going to see a pullback on our 4-hour and hourly? We're going to see a slight consolidation. You can see quite clearly going into the to this European session open. You can quite clearly slight pullback. However, I think the negativity that's come out from the news this weekend, some of it will be factored into price overnight. However, I think we're going to see a slight retracement before we see a continuation to the downside. And we want to see that now on hourly. Look for a box pattern. There we go. You can see an overnight consolidation support. So if you look at where that is on the chart, I'd say a nice breaking close below 1288.100, and you should be looking to the downside towards that 12,700 for the near-term future. Okay, so as it stands now, negativity from Cyprus is now playing turmoil on the markets this morning. We should see the remainder of that playing out through most part of this week. So look for that negativity to continue to the downside. Look for breaks of current support and resistance to look for those entries to the downside for the near-term future, guys. On to sterling. Let's have a look at the weekly chart for this particular pair. Nice bounce on 1485.100 on the weekly. A nice break of that 15,300, that long-term support and resistance level, and price actually pulled back slightly, ever so slightly at 23.6 Fib retracement here on this breakout that we saw a number of weeks ago. However, the momentum was so great that it took price right through until we hit that 1485.100, which happened to be a psychological round number, and also a pullback area on our weekly Fib retracement, and we saw people dumping a lot of the sterling. So sterling buying against the US dollar. Nice bullish engulfing candle, and now we're sitting above the 1485. So to see any further negative sentiment in this particular pair, we do need to see that 1485 being breached before we see any further negative sentiment to the downside. So where are we trading at the moment now? Friday's candle close slightly higher, above the prior Thursday bullish engulfing candle, and above the 1505. Now 1505 is the 100% Fib projection level of this particular move that started way back in January. You can see the first initial move, then this consolidation, and when I did the projection from there to the highs, and then we saw the fall. This fall over here was a continuation of the initial move that we saw through January, and that 1505 was, that level here, and you can see prices are back above it. However, trading below the weekly 78.6 Fib at 15,200, a lot of consolidation here. You can quite clearly see that's a very tight consolidated range here on the daily, so we're trading within that range. Ideally, we want to see a break and close lower than 1505. That would constitute to further continuation back towards that 1485.100, that psychological round number that we saw price hesitating at. Once we get to that level, look for a current break of that, and then we could look for those shorting opportunities back to our weekly time frames. Get below 1485, then we should be looking at roughly the 1445. And ultimately down to that 142500 mark. So as it stands at the moment now, 1505 is above. You can see the institution, you see a lot of huge buying sentiment going through on the 14th, and you can see prices now hanging above that 1505. A lot of consolidation on my 4-hour at this level, and quite rightly so that we are trading above the institution, so everything should start looking positive. On my moving average below price, and you can see the intraday negativity on this particular chart has been breached. Okay, with that bullish engulfing candle here, this massive move to the upside. A lot of indecision, a lot of wicks now, but paramountly, if this is to see price moving higher toward that 15,200 and ultimately to 15,300 again, we do need to see 1505 becoming our new support. If you fail to see that, you can quite clearly see here on my 4-hour, each time price has actually tested the institution moving average on this time frame, it's been held back because of that major support and resistance level above us. So it's important. You can quite clearly see here we had a tweezer top recently, and that's come across at the 15,200 and prices reverted to the downside. So 1505 would be our initial target. If price can actually find support on there, then we could see our psychological bounce and reattempt at 15,200 and 15,300 intraday. However, we fail to see that happening. We see a bearish engulfing candle close lower. That means price is going to revert back to the downside again, because remember, the overall sentiment on our weekly and daily on this particular pair is negative. Okay, we're seeing a consolidation near term, but it's still negative. Okay, it's still below a major support and resistance level in the shape of the 15,300. And if you look at your charts on your weekly and monthly, you'll see it's a very strong psychological border. We are on the south side of it, which is not good. So as long as we remain below that, then we should be looking for negative sentiment. So get a break below 1505, target back towards that 1500 mark. You can see price consolidate. However, the 14,800 would be our near-term support. And then we should be heading back to that. So there's a lot of target areas on this particular pair on the 4-hour, and that should also influence our entries on our hourly. Based on my entries on my hourly, you can quite clearly see I need to see a nice break below 1505 before I can look at the institution back here at 1500 as my near-term target. Fail to see out of that, you can see there's consolidation here. We should be looking for a bullish engulfing candle, specifically on this particular time frame, to constitute that we should see buying sentiment up towards the 15,200 and then back close above that 1500. Then we should be looking for price to head towards that magical 15,300, which is the underside of that major support and resistance level on our weekly and daily time frame. So very, very important. Close lower than 1505. Would look for further shorting opportunities back towards that psychological 14,500 mark. Bullish engulfing candle here at 1505. Look to target 15,200, etc. for the near-term future. Onto the US dollar Swiss franc. Let's have a look at this particular pair. Recently, finding a bit of muster, the US dollar gaining a bit of strength against the Swiss franc in near term since February, moving higher and doing so, breaking this intermediate negative trend. Nice bullish engulfing candle, getting above all this consolidation, and then we've had 2 weeks now where prices actually found support above that 940. Long may it continue, because if we see that, then we're going to see the US dollar still buying a bit of strength. We want to see this week in particular. We had the breakout 2 weeks ago, and then we've had this pullback, and it still stayed above this the 9,400 mark. Now we need to see a nice bullish engulfing candle. Failure to see that could see this exact same thing that happened just recently in November. The breakout, the consolidation pullback, and then we want to see the bullish engulfing. What happened? Bearish engulfing. And that set us up for negative sentiment through December into January. We want to see the same thing now. We are back above it. We want to see a bullish engulfing candle, guys. We want to see a nice weekly bullish engulfing candle this week, or as soon as possible, to indicate that price is looking higher, and then we could target the institution moving average, but our daily back up towards that magical 1,000 mark that we saw price attempting back in June, July of last year, 2012. So very, very important. That psychological round number at 9,400 needs to be now plotted on your daily. There we go. My red line is in there. In fact, the institutions also joined the party. So very strong support at this level. You can see the daily close on Friday, not great at all. However, you can see the news that came through over the weekend for Eurozone is not going to stack up. I think a lot of people are going to be a bit twitchy now with Cyprus. They're going to start looking at alternative areas to invest in this very, very negative period now that Cyprus has joined the party, looking for bailout funding. And as long as 940 stays below price at the moment now, we're looking for a nice support, bullish engulfing candle. Get that, and then get back above this intermediate upside trend. You can quite clearly see that we've had swing highs since February. Then we should look to see price moving on that to the upside and then heading to that magical all-important 1,000. So it's very, very important that price actually finds a bit of momentum this week. We do need to see a nice bullish engulfing candle getting above the 950. If we don't get it, we're going to see price trading in this consolidative range, which it has been doing for a number of weeks. And as long as it continues to do so, then the more likely is we're going to see a top, and then price is going to head to the downside. So very, very important. We want to see the US dollar starting to find a bit of momentum on our 4-hour charts. Here we go. You can see the intermediate trend. Price actually tested it not too long ago. We had this bearish engulfing candle. However, we've had two very strong negative indecisive candles. We had a spinning top and a doge a doji and a spinning top at this level, and now we've had a bullish engulfing candle, and prices headed back up last night. So, and now you can see it's above the institution moving average. My CTC template is still telling me it's negative, okay, because it's so volatile at the moment. Prices must remember this particular strategy layout is very lagging. So, and that's quite clearly what's taking the moment now. This movement has been so sharp, so abrupt, that price hasn't been able to catch up with it, and therefore price is still giving us a negative sell indication. But we want to see a nice bullish engulfing, I mentioned. Get above that 950, then we should be looking for that all-important move to the upside, support above here, and then target that 1,000 near term. Last pair of the day is US dollar Japanese yen. Let's have a look at this particular pair. Interesting. The first part of last week, price was looking really bullish. We saw price trading, spending more time above the 9,400. However, you can see how important it is to wait for the candle to close. So, very, very important. The look of the candles last week, or this particular, the weekly candle last week, when we had a look at it, was looking very bullish. And in fact, it looked like price was actually going to find some mustard and actually end up being a nice bullish engulfing candle at that 94, that psychological round number. You can quite clearly see on my monthly chart, since those highs we saw in 2007, the US dollar has lost a lot of pace against the yen. However, near term, you can see a very much a building process, and you can see a nice strong bottom ends up being a nice strong support, and price can build on it. And sure enough, I've mentioned it through most of 2012 that we should be looking for that buying sentiment to come through, and sure enough, we saw it. Price heading up towards that magical February retracement area here, the 23.6 at the 8,700 mark, and very much going into that support and resistance level through the November, December of 2012, and then we've seen this major break higher. All of 2013, the moment I was looking very, very positive, breaking above 23 and just kicking on towards that 38.2 area at 94. However, coming unstuck. You're seeing a lot of hesitation as we head into it, and that is or has been reflected on our daily chart. Look where price is trading right now. Back at that 9,400, guys. Right at that 9,400. So, great. As long as it stays above the 9,400, you can see before price actually spent more time below the 9,400. Hence the reason why there was resistance. Now we've had a nice break of it. On the 7th of this month, January, March, yes, we saw price trading above it. And in doing so, we see this major move to the upside. However, cap near term and price has fallen back. We want to see now the US dollar finding support now at 9,400. The longer it spends above 9,400, the more likely it's going to find support and kick on to the upside. Okay, so histogram for this particular daily period. Quite clearly see there's no red. We do have a red arrow in play at the moment now, and that's a bearish engulfing candle we saw on Friday after all of this indecision. Okay, and sure enough, we saw price opening lower and moving into that 9,400. However, it is still trading above a major support and resistance level in the shape of the 9,400. This is a monthly and weekly fib retracement area here, which is the 38.2 fib retracement. As long as it's below price, it is going to be supporting price. So imperative to see this as a genuine support, which was a prior resistance. We do need to see a bullish engulfing candle now at this level. So hesitation, not going to be trading in today at the moment. I'm not trading this at all this today for the foreseeable future until I get a nice bullish engulfing or bearish engulfing candle at this point. End of story. I'm not going to go into more further detail about it because we are trading into this area. Okay, there's far too much risk attached to it. So anything you're seeing intraday negativity, like here for example, my 4 hour, I've only got 2 parts on my 4 parts, and you can see the institution is at the 9,400 on my 4 hour. My daily, you can see now I have everything red, all my moving average above price. However, price is now near term finding support at 9,400. It is imperative that I get either a nice bullish engulfing candle above all this, or I get a bearish engulfing candle below 9,400 to even look at potentially another setup for this particular pair near term. So as it stands at the moment now, I'm happy in the fact that price is still finding a bit of support at 9,400, because as long as it maintains above 9,400, I should be looking for positive sentiment, bullish engulfing candles. The quicker it gets below 9,400, the more likely the scenario is negative. So therefore I should be looking for a bearish engulfing candle, and then I would look to target to the downside, and I'd look to those levels on my daily to check where price has been to before and to use them as a potential target area. 9,300 in particular is another one. If I get below the 94, because I got my 50 period moving average coming up from my daily to complement that 9,300 as well. So not going to do anything until I get those two signals, either bullish engulfing or bearish engulfing. That's for today, guys. Please be aware, not a hell of a news out. However, the news on Cyprus that took place over this weekend will be the talking point of this week. Okay, I guarantee you that's going to be the talking point for this particular week. It's going to be interesting because today I think they're going to be trying to work out something, some bailout funding, but the Cypriots will have to obviously pay for that, and doing so in a lot of their savings accounts, etc. like that, are taking the major brunt of it, and there are a lot of very irate Brightons, as rightly pointed out on the news over the weekend, and that's all going to take place now. So it'll be interesting to see what happens this week regarding Cyprus, and what happens this afternoon if we do hear any news about the bailout plan. So keep that in mind. I think we should look at any euro crosses in particular. Euro, I think, is going to take a lot of strain this week relating to the news that's come out in Cyprus. So I think we should take well advantage of it. So I know it's not pleasant, but that's the market. You can make money both ways, and if you want to be able to take advantage of it, then you should be able to look at those cross pairs regarding euro. Other than that, have a fantastic trading day. Keep it simple, guys. If you're following this particular template, please follow the rules of it. Very, very important. And back it up with sound money management. Okay, I keep tripping. It's a tongue tripper, but it's very, very important that you do apply money management. Very, very, very important. Okay, the market is very, very skittish, very speculative, and because of that, we want to be very, very adherent with our actual money management rules. Very, very important. Okay, I'll leave you to it, and I'll see you first thing tomorrow morning. Until then, trade serenely.